What is an ideal asset allocation for an average Indian? I can understand why this question. Why I am getting so many questions like this in my mailbox. In an uncertain economic outlook, when the stock market is volatile, and in India generally people think volatility means risk profile, risky asset. Gold prices unpredictable, and nobody is sure about the direction of the property market. So this is the common query that I am getting. What is an ideal asset allocation for an average Indian? First of all, I am not a SEBI registered financial advisor, so I will not give any specific advice. But whatever advice I am finding in the market today is based on global assumption. There are certain global benchmark. For example, the global benchmark is that your house, your primary real estate should not be more than one third of your net worth. Now, by going by this calculation, nobody in India can afford to buy a house. Similarly, in terms of the stock market allocation, global benchmark is that you should divide your age with 100, and accordingly that portion should be in stock market. All these are global benchmarks. In those countries where these benchmarks are relevant, stock market is very robust, very well maintained. In India, we have seen how the chief of stock market regulator SEBI has been under a scanner. So I will not go by what the global benchmarks are suggesting. For me, the ideal asset allocation for an Indian starts with the very first question: what is your definition of asset? Unfortunately, in India, most of the people don't understand between asset and liability. For example, if you have bought a house worth 1 crore and have borrowed 80 lakhs, where you have to pay back to the bank 1.45 crores, then that is your liability, not asset. In India, asset and liability has to be well understood. Whatever asset you have, reduce your liability with that, and the rest that is with you is asset. And I will not even suggest anything that you should have this kind of portfolio in this age group, because by the time you have some asset in India, you are in the range of 40 years, 45 years. So I am taking an assumption: you are 40 years old, you have 2 crore as your net worth. Then what should be the ideal asset allocation? I have always maintained 40 40 20 or 40 40 15 and 5. 40% of your net worth should be in real estate, 40% in capital markets, 20% in gold, or if your risk profile is high, both spouses are working, then 15% gold and 5% in speculative assets like cryptocurrency or a startup. Now, someone will say 40% in stock market, it's very risky. Again, what is your definition of risky? You find capital market risky because you track stock market on a day-to-day basis. You don't track your property prices on a day-to-day basis. If you buy a house today and sell it within next 1 year or 6 months, you will realize how risky that investment is. Ask those people who have bought a house with their hard-earned money and are waiting in the courts for 10-15 years. Ask them how risky is property market in property in this part of the world. Risk stands with each and every asset class. Gold is a bit of exception, which normally does not have that kind of risk profile, and it normally beats the inflation. But real estate and capital market both are risky. It's all about your understanding. If you understand real estate, then it's not risky. You will not go for under construction property. You will only buy ready to move property. If you understand capital market and you know that you cannot have track of each companies where you are investing, then you will go for mutual fund or index fund. So it's all about your understanding. Each asset class is risky. Capital market is as risky as property market, and in property market many people have burnt their fingers. So your ideal allocation according to me should be 40-40-20 or 40-40-15-5. Be rest assured that each asset class is equally risky, so you have to gain some knowledge before investing. For me, as Robert Kiyosaki said, risk stands for reckless investing sans knowledge. If you don't have the knowledge of any asset class, be it stock market or property, you are going for a risk profile. So first understand what is your asset, understand where you are investing, why are you're investing, and then take a decision. I can give you only the broad ideas that 40-40-20 should be your asset allocation, but at the end of the day, it's your hard earned money. So you must first learn about asset liabilities and various nuances of investing. I rest my case. Thanks for watching.